So, ladies and gentlemen, welcome to Fintech Summer Sessions 24. We're in week 7 of Fintech Summer Sessions 24. I can't believe it. We only have 4 more weeks left. I know you're all disappointed, but look, we've had a great season so far. If this is the first session you're joining us for, where have you been? You missed some amazing sessions, but you can watch them on record. But today we've got a great session on banking as a service. So this follows on from what we were learning last week with Arjun Singh on embedded everything. Now we're going to double click on a really important area of banking as a service, which is very well connected to that. And we're so pleased to have Hussam Kaya with us as well. Hussam is the Chief Revenue Officer for Foo. Foo is a great software company involved in doing a lot of innovative solutions, which Hussam can tell you a lot about, do a lot of work in fintech. So we're really pleased that we could have Hussam here with us. Thank you very much, Hussam, for being here. As ever, we're going to let Hussam do the presentation, add any questions you have in the Q&A. And as we've sort of done for the last few weeks, we do have another announcement related to 24 Fintech. We want you guys to be the first ones to hear about it. Another exciting announcement. Do stick around to the end and you'll get a little bit of that as well. But for now, handing it over to Hussam. Hussam, thank you and welcome.
Thank you very much for the introduction. I'm very privileged to be, among friends and thought leaders across the different industries. So I'd love to just share a point of view about a very evolving topic that we all are kind of living through. So thank you again for the opportunity. So I'm going to spend about 35 to 40 minutes to go over some of the basic when it comes to banking as a service. As I said, as I was introduced by Sagar, I'm the Chief Revenue Officer for Foo. But I've kind of lived most of my life in Saudi. So I was part of Cisco, the setup of Cisco back in 1997 and the introduction of the internet to Saudi Arabia. Then I evolved and doing different things. And then I joined STC in 2015. And I kind of was intimately involved in the setting up of STC Pay, the ideation, the actual business model, the presentation to the board, and so on. So, this is kind of the transformation to the financial service. So it's very important that, you see the evolution of not only the companies, but even people. And then I've been with Foo for the last 3 years, driving how we actually as a company can scale in the region and beyond. And we're very privileged with a lot of strategic partnerships. So we are basically, as Sagar has said, we are a B2B software enablement company that provides solutions for banks, fintechs, digital banks, embedded finance, and others. But primarily today, I'm going to talk about the technology, the topic, not the company, but I'm more than happy to address any questions if you feel like to reach out to me later. So what I want to do is I want to talk about, just set the foundation for what is banking as a service, how banking as a service works, the benefit for banking as a service. We'll talk a little bit about some use cases, both globally and in the region, and be very surprised that actually I've seen some of the early adopters of banking as a service in Saudi Arabia, which is amazing because the financial sector has been always a leading player in the region. And then impact of banking service on different banking models and technologies. How does open banking work with banking as a service? Because people sometimes confuse open banking with banking as a service. I will talk about some banks on a global context and how they've actually used that, but I will actually mention some local banks because I think we're seeing some amazing drive for banking as a service in Saudi Arabia. A lot of the banks actually are already engaged in some way or another in actually coming up with services in that context. And then I'll talk about, there will be a conclusion and recommendation. So this is what I want to cover today. So starting with the definition, I think, just to give you a context, so banking 1.0 is when people actually, this was in the, when banking started, you can only bank at the bank during the banking hours. Banking 2.0 is basically when bank realized that they can actually extend the banking service beyond the working hours by putting out an ATM machine. This is the times of NCR and IBM actually creating ATM machines, automatic teller machines. So, but you still have to physically go to a bank branch, but after hours and get some banking services. The biggest transformation for banking service and financial services happened with the boom, with the internet boom, and this is where internet banking, online banking happens, and that's banking 3.0. So basically, banks will be able to deliver services through using data, digital channels to do that. Then, with the evolution of fintechs and what's happening from a disruption that, the likes of crypto and others, and the transformation and the engagement of regulators to actually open up the financial institution to fintechs, but more importantly, the transformation of retailers where they're looking at other services, created something called Banking 4.0, which it basically is the foundation of banking as a service. And this is where banks realized that they have the the banking license, they have the setup, they have a lot of assets that actually have invested in, and they can actually deliver these services, these assets as a service. And that's the, if you want, the foundation of the start of banking as a service. So it's basically, it's when banks actually are providing banking products and others, their own products or other services through other third-party services for non-banks. It could be fintechs, it could be retailers, but at the same time, banks themselves are actually using the framework to deliver the service themselves, because they had to actually evolve their technology, their architecture, so they can be agile. So opening up their core systems, their assets to third party is basically the transformation in the thinking. So why this is important? I think last session you talked about embedded finance. Embedded finance can only happen if banks actually enable that. So there's this context of fintechs who are trying to build things on their own, or companies like Carrefour, who wants to create a different payment acceptance service, or Jahiz in Saudi Arabia, or Delivery Hero, who wants to find means to create a seamless experience when it comes to payment, or actually pay their riders. These are basically driving basically requirements to enable banks to participate in that, because regulators are actually encouraging that as well, because they want to be able to extend and improve the customer experience, improve the lifestyle of people, but at the same time they want to make sure that banks can provide that context of regulation, KYC, fraud detection. Banks are designed to do that, while fintechs are trying to find ways where they can, fintechs or non-fintechs, especially in an embedded finance context, could be retailers, mobility companies, ride-hailing companies, and so on, whose focus is more on the experience, and they need an element of the banking service to be delivered. So it's a win-win model. So these third-party companies will be able to deliver financial services without having to worry about, kind of like going through a thorough regulation, because sometimes you're not a fintech in that context. You don't need to have a license, but you need to be able to have some sort of a regulatory overview. So people confuse banking with banking as a service with open banking. So open banking is about basically giving entities, third party, the ability to access an element of banking data for specific end users, whether it's consumers or corporates, with a very clear consensus for them to be able to provide a better service to that targeted audience. Banking as a service is basically enabling companies to actually benefit from a portfolio of banking assets, whether it's opening bank account, using a card. I think people, when talk about banking as a service, they think about BIN sponsorship, which is obviously not the case, right? Because it's a much more than providing a BIN range. It's significantly more important than that. So it's basically being able to provide a seamless, straightforward, very rapid access through API or SDK of specific banking services like account opening, KYC, remittance is a great example, loan management system, card as a service, wallet as a service, to these entities, where it can enable a lot of use cases. So how does banking as a service works. So there are three elements. There's the collaboration aspect of things. Non-bank business partner, they basically create a partnership with the licensed banks, and the term licensed is very important because they leverage that context of licensing. And actually, more importantly, that service is delivered utilizing the brand bank to provide that level of security and authenticity. And the bank obviously deals with the regulatory aspect of things and the infrastructure. The second aspect is the actual integration. So historically, if someone wanted to actually integrate with some elements of the banking service, it's a very complex process because banks by design have very legacy systems, core systems, card management systems, switching systems, ATM switching systems, and others. And to be able to do a proper integration, addressing security element, addressing services, and so on, it becomes very, very complex. And it's time consuming, and it's not, it creates a lot of overhead on the banks. So banking as a service take away all this by creating a new architecture that enables very straightforward integration with these services through a multi-services layer, reducing a lot of overhead and dependency on the bank IT infrastructure or IT resources, which is very critical for the business side of the bank. And there are three layers of banking as a service. There is infrastructure as a service, so you're actually only utilizing an element of the infrastructure, banking as a platform, and then fintech as a service. And we'll talk about this through the different use cases. So just for you to visualize how this would work, because I felt that it's important to give you a context, I'm using a full architecture model here. So this is the full backend layer. So this is the core banking, card processor, loan management system, the CRM, AML services. You can do treasury, you can do remittance, and so on. These are different independent banking systems. And then there is what we call the multi-services layer, the API orchestrating layer. And then you can add third-party products, right? Like in this case, we're adding full products like stored value account. You're looking at the digital merchant platform. You can add a third-party remittance. You can use the bank remittance corridors, but you can add third-party remittance systems and solutions, account management, loan management. And then you can actually add as well government services, like, when it comes to authentication, KYC, it can be either routed through the bank or it can be delivered through a service layer through that platform. And then you have what we call the fintech or the banking as a service platform that actually enable these fintechs, these retailers, these service providers to actually get onboarded through a KYB process. Know your business. KYB is for corporates, and then they'll be able to select a service, subscribe to that service, and they'll be able to get access to the APIs and have that enabled immediately on their digital channel. And this is a very, very simplified model, but that kind of architecture enabled a lot of innovation, enabled banks actually to get fintechs to be up and running in weeks instead of months. Okay. And fintechs, instead of actually spending a lot of time developing solutions themselves or building this in-house, they'll be able to leverage a well-established assets that already invested in, proven solid and scalable. So it gives them the ability to innovate without having to worry about scalability and the delivery of service. Obviously, there are things that has to do with security, like PCI DSS certification. If you're not dealing, so some of the things that can actually help in that context is the ability for the bank as a service to provide elements of regulatory support. So you don't have to worry about carrying customer card data information, for example, in case of a card as a service and others. So that even accelerate and facilitate the regulatory approval in case you need to do that. It's a very similar model, but here you talk about how the fintech will consume these different services. So for the fintech, he doesn't see that he's connecting to basically a KYC platform or a digital onboarding platform. He sees a service. So he's basically consuming a service. He's consuming a service of opening a bank account. He's consuming a service of card issuance. So these are different services that can be delivered either through an API, and there's a development portal that you can actually build on top of that. Or in some cases, it's an SDK that plugs into that fintech, basically digital channel or app, which even makes it even much simplified, and it's secure, and it actually avoids a lot of the complexity when it comes to end-to-end security. So different ways of actually how that service gets delivered. So what are the benefits, some of the benefits of the banking as a service? So it's very cost effective. So non-banks can offer financial services without having to spend a lot of money, development work, CapEx, to actually create a solid solution. So anything to do with, so I could be, for example, I'll use the example of Carrefour. Carrefour is a retailer, right? So if you have Carrefour in Saudi, download the app, there's actually a wallet on Carrefour. That's a closed loop wallet. So they don't have to worry about building that solution. They're actually using a service delivered through us as Foo. But that gives them the ability to focus on their business, which is retailing, supermarket, food and beverages, while ensuring that they can get an amazing checkout experience. So if you return items, you don't have to worry about returning it to a credit card or a debit card. Automatically, you basically credit that into your wallet, and then it's available real time, so you can reuse it again. So for a retailer like Carrefour, this is an embedded finance example. They didn't have to worry about building that solution in-house. They just focused on their core business, and when it comes to payment or any financial service, they're actually leveraging a bank or a card as a service or wallet as a service to enable that in that particular business case. So that saved them a lot of money and effort. Obviously, time to market, this is very critical. So once these services are available, theoretically, or actually in real life, in the last few years, if you want to deliver a service that requires integration with banks and other systems, let's say, you're looking at card as a service, you need to integrate with the bank, you need to integrate with the card processor, you need to ensure that you have a selection of the scheme selection, a very complex process, and this takes sometime a year for you to be able to do that. And that's actually very costly from a time perspective and doesn't give you the ability to deliver and test that particular use case. Now with the banking as a service, it's a consumption of an API. Once you do the integration with an API, it's a month and a half, you'll be able to actually go for an MVP that you can take it to market and take it to the next level. Obviously, as long as it's within the regulatory framework, of course, and SAMA has been very supportive in enabling and pushing banking as a service, working with different banks, with different financial institutions and fintechs to understand how they can actually leverage that. User-friendly interface, we talked about the complexity. So these are, if you look at from an interface perspective, the dashboards, the fintech as a service platform or the banking as a service platform is a very user-friendly. You'll be able to select the service. You'll see all the APIs that you'll be able to consume. It's actually very easy for you to actually implement these services. More importantly, you'll be able to continue to evolve to support emerging trends, right? So here, whenever there's a new service, let's say you start with certain services like card as a service, wallet as a service, loan management as a service, and then tomorrow remittance becomes an important service. You just basically enable that service on the platform, and that's it. That's as simple as that. So the ability to drive, let's say, custody wallet for crypto becomes something that will be legalized or licensed in Saudi Arabia. Then it becomes something that you can actually add to that. So just to talk about some of the use cases from the banking as a service, I mentioned Carrefour as an example for an embedded finance. So startups, Square, I don't know if you know Square in the US, Robinhood used banking as a service to offer features like instant deposit and real-time trading execution, streamlining financial processes. E-commerce platforms We're seeing more and more, even Noon in the region are looking at banking as a service to talk about enable things like wallet as a service, refunds, transforming loyalty into tangible value that can be utilized through a card, through a prepaid card. There are multiple ways of actually how e-commerce actually transforming the experience, their customer experience in using the banking as a service. Basically, we talked about Hunger Station, Jahiz, and others. Uber, for example, one of the most interesting areas of how they transform the business is actually how they'll be able to pay drivers, they call them captains, on a daily basis by basically creating a prepaid card that they can actually, or link it to a bank account in some countries, that they can do immediate transfer at the end of the day. So they reconcile the payment and actually be able to deposit that into a prepaid card. So riders have, or captains have, the ability to, on a daily basis, be able to receive their proceeds, right? Retail and airlines. I'll give you an example of a potential airline. So airlines are looking at how they extend services beyond. So any industry are looking at how they can extend their services beyond their core business. So airline, are looking at how they can create a multi-currency travel card. So actually, as you book your flight, they'll be able to issue you a multi-currency travel card that you'll be able to use, and it's a virtual card, so you can add it immediately to your Apple Pay or your Google Pay, and you load it, and they'll, obviously in the background, they can only do that through a banking as a service integration with the bank. But that's how they actually find ways where they can extend additional services to help you, continue to increase their stickiness, loyalty with them, and so on. Another example, which I can actually use, that's actually one of the innovative examples in Saudi Arabia. I don't know if you know Virgin Mobile in Saudi. Actually, it's one of the first adopters of, it was not defined as banking as a service, but it is a banking as a service use case. So they partnered with Saudi Investment Bank to actually, I think they have around 3 million subscribers. They have a very focused niche customer base, and they're actually delivering remittance. So it's a very interesting thing. So a mobile operator, in this case, actually are enabling a remittance service on their app. So basically, you select the country, you select the beneficiary, but in the background, it's Saudi Investment Bank corridors, and they do all the KYC and AML checks. So it goes very smoothly from a regulatory perspective. It's kind of like an early adoption of agent banking, which was initially the kind of like the regulatory framework that supported that. But that's a great example of how a mobile operator is actually monetizing from their assets, and how a bank have leveraged an active digital channel to actually extend their financial service. So it's a win-win for all parties. How is this impacting banking models, right? So the beauty about what's happening with the transformation in the fintech world is banks are more and more realizing it's all about the experience. So basically they can use that to find ways where they can enhance the customer experience. So integration allowing bank to offer a broader range of services using a different kind of channel of delivery. So by design, I have, as a bank, I have the concept of a personal loan that provide, I don't know, maybe 20 times your salary, but through working with a consumer lending company, they'll be able to leverage my loan management system, my credit scoring, to offer a much smaller loan in a revenue sharing model with that particular fintech, right? So these are examples of how they are delivering or enabling someone else to actually deliver a better customer experience, and they can actually learn through that process. It's impacting their cost efficiency and scalability. So here, the ability for them to outsource certain services. So by bringing third party to come in, so instead of actually building a technology within the bank itself, they'll be able to buy third party solution and integrate that and enable that as part of the banking as a service solution. So We're seeing, for example, banks are integrating data as a service, AI tools, and they deliver that as part of their data analytics, service enablement to the fintech. So this is one way of actually monetizing from a third-party solution that can be part of the banking as a service framework. Innovation and speed to market. So one of the things that banks are learning from banking as a service is as they build that infrastructure, that microservices infrastructure with APIs, they're realizing that themselves as business, they're enabling their business, their own business entities, whether it's retail or corporate, to innovate and create their own solution, leveraging these integration platforms. So kind of like banking as a service, but for an internal use, which is very interesting. Banks are finding ways to access new markets, new verticals, new segmentation by enabling the banking as a service. So it's part of the learning and the discovery they can go through. And obviously that gives them the ability to, once that asset, so I have a core banking already up and running and I'm paying a license for it, or I have, for example, a card management system that I'm already paying a license for on a yearly basis. How can I basically maximize leveraging that and create additional service that can actually cover that? And then obviously the way it is changing banks, it's how they actually changing the mindset to make it a customer-centered service delivery, which is very interesting. So one of the biggest learnings that banks are realizing, and this is obviously went through a very strong learning curve, is as they started to open up for integration, because either the regulator is imposing that or the market is imposing that on them. But more importantly, they're realizing more and more that they have to find ways where they can, they've made that significant investment on a core banking. Now, for them to be able to agile and to be able to deliver services, they have to find ways where they have to evolve to something called next generation banking architecture, and banking as a service is enabling that for them. And more importantly, banks are finding more and more that as they actually deliver that, they have these open discussions with the regulator, in this case, SAMA, to talk about how they can actually extend that to other fintechs to basically deliver on that time to market concept. And this is where some of the interesting emerging models is happening. So when it comes to who is responsible for a fraud that happens on a card and how it's going to handle that, these are emerging discussions that's happening as we speak. And these are some of the learning that banks are going through in the region. But these are things that actually has to happen to make it, to deliver that. Last but not least, banks are actually always required by the regulator to address financial inclusion. It's part of the KPIs. And by enabling banking as a service, they'll be able to address their financial inclusion KPIs by enabling third-party fintechs and others to deliver services to areas where it's remote or unserved communities and so on. And that's part of the how it is impacting banks in this context. And last but not least, it's something that they're realizing more and more that it will give them a competitive edge because it is giving them the ability to respond to the market dynamics, to the drivers from a consumer perspective, from a corporate perspective. I mean, for example, small and medium businesses is a very unserved kind of segment in most of the countries. And how is basically banks are trying to address that through a banking as a service model. So in the interest of time, I'm not going to spend too much time on this. Banking, open banking and banking as a service. So I just want to make sure that it's very clear that we're seeing some convergence here. So as banks are offering banking as a service, they're actually as well enabling the integration with third-party players who are licensed to deliver an open banking solution. So open banking is you have these licensed players like Lean, like Tarabot, in Saudi Arabia, who have basically the license to actually extract data from connecting with different banks, like for example, account information, with a very clear consensus from the end user. This enables fintechs an extended amount of service. Think about consumer lending and how you'll be able to offer loans very quickly by looking at most of the people have multiple bank accounts. So it's not only the salary, but how is the expenditure, how they actually manage their bank accounts. It gives you a feel of like an alternative credit scoring. So it gives you an additional level of comfort to actually offer, extend loans to them. So this component is actually being delivered as part of the banking as a service services. So that's one area that banks are seeing as something that they can actually white label to enable fintechs to actually participate and actually be part of that. And there are multiple benefits when it comes to enhancing operational efficiency. It gives the ability to expand market reach. And then more importantly, obviously, this has to do with how you actually deliver that in a secure and in line with the regulatory compliance framework. So I want to talk about global cases for banking as a service. So these are very specific examples of. There's plenty of examples out there. So if you do your research, it's very important to not to look at only the services, but very important to look at the business model, the commercial model. So BBVA is a Spanish bank, one of the leaders in adopting banking as a service, one of the early adopters in banking as a service. So they have created something called an open platform, and they offer API to third-party developers so they can deliver different services to others. So not only they actually do an API delivery, but actually they've enabled others to actually deliver and build services on top of their APIs that can extend to fintechs and embedded finance. One thing that is very important to notice, one of the biggest challenges of banking as a service that needs to be addressed is how do you actually go to market? What kind of commercial model do you want to offer? Do you charge per service? Is it a revenue sharing model? Do you charge per API consumption? There are multiple ways of actually you can do that. But you have to, one of the biggest learning is the more you make it complex for fintechs and retailers to understand, the less adoption you get. So it's very important that you look at volume business, but more importantly, you look at how you'll be able to price this in the way that by understanding the market dynamics, what use case you can enable in the market. So think about a model where it becomes easy, for example, like, example for that is card as a service, right? You don't have to worry about setting up fee, cost per fintech and so on, as long as it is a very simple, Stripe has a very simple model, like it's 10 cents per card per year, right? Obviously, it doesn't scale to other markets, but as simple as that, it should be a very simplified commercial model. Otherwise, it becomes. So these are some of the learnings that we get from looking at global examples. How they actually price it, not how they deliver the service, right? Solaris Bank is a German bank, so it's licensed to be a banking as a service. So actually, they've got a license, and they don't do retail. They actually do banking as a service itself. So they do digital bank lending, payment services, and they have, they're across Europe, right? So it's because of the EU, so they can do that across multiple countries in Europe. Cross River Bank is a US bank-based bank, and they support, they actually work with crypto exchange houses, and they offer ways of actually creating a payment and custody wallet for. So instead of actually keeping the wallet at the exchange, you as a bank become, like a safety deposit box in the old days. Because one of the biggest challenges of crypto is how do you actually keep that you don't want to worry about losing the key or whatever it is. So we're seeing more and more an emergence of what we call them custody wallets that banks actually do. Green Dot, I think probably you would. They are one of the early adopters of banking as a service, supporting Apple and Uber. So we talked about the Uber example. I just want to. I think everybody knows Goldman Sachs because of the famous Apple Card. So it's a great example of a global banking as a service implementation. Obviously, Apple Cards are not everywhere, but it's basically one way of finding means to build a service that can potentially go global. Just in the interest of time, I'm going to go through this very quickly. So how do banks implement banking as a service? What are the criteria? What are the things that they have to do to ensure that they actually have it ready for them? So first thing they do is actually they look at a next generation banking architecture. So one of the most important thing is for this to work, you have to revisit your banking architecture and actually create a microservices driven architecture where API becomes the enabler. Very importantly, either they do that in-house or they look at third party like Foo, for example, and build a white label solution. So, Card as a Service is a great example of a white label solution. So you don't have to worry about all the, integrating with different services. I just want to be able to create an ability to issue a prepaid card so I can pay my Jahiz driver, right? So it's a one-stop shop. So, the KYC, the digital onboarding, the ability to issue the card, the ability to manage that card, the ability to deposit into the card, the cash out, all that aspect of it, basic, and how you manage that card as an end user is a white label solution that can actually be delivered. So banks are actually finding ways where they can. So you enable the assets of the bank through the multi-service, so a new architecture, and then you think about how this can be delivered. It's not only an API delivery; it can be as well through a white label solution, a one-stop solution. The third component that actually very critical for this to work is to have a very clear approval from the regulator, in this case SAMA, about specific use cases. So if I'm going to basically create a prepaid card, or I'm going to basically deliver a wallet as a service in a closed loop fashion, what kind of regulatory framework I need to be able to apply so I can actually enable that. Because it's very important. The biggest challenge with banks is they are bound by a very, very, very tough compliance organization. So by by looking at a new model of positioning these services through the regulator, they'll be able to fulfill the compliance organization, but without really actually having to worry about a new regulatory framework. They can actually use the same, because that's the value of them being a licensed bank, right? The fourth component is how they can actually deliver, using their assets, instead of actually them building everything, their own, they'll be able to enable others to innovate, and they leverage the back end, all the assets that the bank, all the components, all the systems that the bank has, while someone else has the ability to deliver a differentiated customer experience. So that's an important mindset that the banks has. The fifth component of how banks are implementing bank as a service is cost efficiency and scalability. So what kind of, this is where banks are looking at cloud-based computing, right? Where it becomes easier for them to scale a service very quickly. The sixth aspect of the readiness of banks for banking as a service is how basically what sort of timeline they'll be able to deliver this to the market. A lot of banks are actually trying to do that, and they're struggling with how they can actually build that, how they can take it to market. So the technology aspect of it is straightforward, but when it comes to the go-to-market, it becomes an issue, because it carries, you have to worry about multiple parties within the organization, multiple silos within the banks. This is where things like a chief digital officer in a bank take ownership of actually coordinating across different departments. He has the vision, the ownership, he or she, the strategy to execute that. And then last but not least is what kind of market segmentation. So we're seeing very interesting trends. And I've been talking to banks in Saudi. One of the banks actually is talking about a verticalized banking as a service. So he wants to basically deliver a service that actually focus on healthcare or focus on government sector. So it's not technology driven. It's actually a vertical or service driven, which is very interesting to look at from a market positioning. Sorry. So the what kind of we're seeing four patterns of banking as a service. We're seeing something called providers, aggregators, distributors, and distributor aggregators. So providers is basically when you are providing your own assets, right? And then you deliver that through the banking as a service. Provider aggregator, and this is a Deloitte's information, is where they combine capabilities with other vendors. So basically, kind of like it's like when we're talking to one of the banks Saudi, and he's actually looking at using our card as a service or our wallet as a service, and that's basically it's leveraging their own assets and third-party assets. This is called a provider aggregator. Distribution is basically where you purely are distributing someone else's product, right? You're not actually leveraging your assets. So you're actually you're creating a very unique position, but actually through a distribution model. And this is where it's a revenue sharing model from a commercial perspective. And then last but not least is something we're seeing more, a distributor aggregated model, where you have that service and distributing that, but you're augmenting that. We talked about AI, for example, and data service. That's part of what this could be as well as a use case. Okay, so I'm gonna spend like the last few minutes talking about the technology used to implement banking as a service. So we talked a lot about API integration and what kind of platforms, what kind of systems are actually in place to actually there are multiple solutions that are in the market that can enable you to actually do that. We talked about cloud computing and how basically especially from a scalability perspective, how banks are actually trying to deliver that through a cloud computing, even if it is in-house on-prem, but it's architected as a cloud service or leveraging a well-established cloud service in country on soil, which is obviously allowed by the regulator. And then we're seeing more and more the introduction of AI and machine learning to address things related to fraud detection, what we call. So as you actually start to get trends or understand data trends, you'll be able to as well create actionable insights. So you create insights, and then you actually be able to action on that insights. So for example, what would be so you'll be able to tell that entity that's actually buying that service from you, for example, loan management services, that these particular customers will churn, they will not renew their loan, or there's a potential to upsell this particular customer by looking at trends and how you actually be able to action on these insights as well. We're seeing some elements of blockchain technology in implementing banking as a service in some markets, although blockchain is a distributed platform. We're seeing this used, for example, for to build smart contracts related to wallets or KYC or certain aspect of how you actually use smart contracts to implement that service. We talked about big data analytics, and then very importantly, we're seeing banks actually they're creating their own in-house, or they spin it off as a separate entity to actually build the capability to build digital channels for their own use, but more importantly as a service to others as well, which is very interesting. So kind of like they overlap with service providers like us, because it's an area that they see that they can bring value to. We're seeing an emergence as well of robotic process automation, especially when it comes to areas related to data entry. I mean, RPA is very well used in insurance, but we're seeing this as well moving into banking as well as part of the banking as a service technology enablement. Last but not least, If I think that's one more point. Cybersecurity solution related to how you actually look at end-to-end encryption, end-to-end security, tokenization of assets. They're all kind of components that are actually delivered as a service as part of the bank, and service that enable beyond the legacy, the standard security that you actually has as a bank today. Obviously, we talked about open banking and how this is being integrated as part of the banking as a service. And then we're seeing more and more, and we have examples in Saudi. I think Rashid Bank has a very interesting example, and Riyadh Bank with Jeel, software development framework. So they're actually building what we call SDLC, software development lifecycle. So they want to be able to actually create solutions in-house so they can service the bank and others as well. I'm going to skip through that very quickly. So API technology, API gateways, management platforms, microservice architecture, developer portals is something that is being utilized. So part of the delivery of banking as a service is how you actually build a developer portal, because that's where you enable others to consume your services and deliver and consume a service. You don't want someone just to integrate with your account opening. Account opening is one element. It can be bundled as a service through a developer portal model, right? So we're seeing fintech who integrate with the bank from a banking as a service concept, or innovators who actually deliver or build services for others to use to consume, like fintechs and retailers. So requirements from an architecture perspective, it's an API-centric architecture, cloud-native infrastructure, microservices architecture. We talked about this. And then people who understand cloud computing, containerization, and orchestration is critical in scaling this, because you want to be able to have the ability to deliver that through a containerized model, event-driven architecture, and obviously a very robust security framework. So I had to rush through these because I'm running out of time. And then data, but more importantly, how you actually be able to monetize from data, how you actually be able to build a framework where this becomes data as a service, not only banking as a service. With that, I conclude. Thank you.
Sam, thank you so much for this presentation. There's a lot of details there, and I will make sure that you guys can all review the recording and the slides. I know there's a technical issue on the Google Sheet, which you have in Telegram. So we know that some of the slides haven't been updated, but we are getting that sorted ASAP. So you'll have all the slides. But Sam, thank you so much. We have a lot of questions. I'm just going to fire a few.
Sure.
I know we're short of time right now. First question, which is asked by a lot of people. Where are we with banking as a service in Saudi? So you mentioned there's a little bit happening with a few of the banks. Are you expecting to see more happening in Saudi? And if so, which areas do you see developing?
Yeah, so with no exception, all the banks are thinking about banking as a service. Some of them actually are in the implementation phase of banking as a service. So they've revisited their architecture. They've actually enabled kind of like they're creating the technology enablement piece. But I think there are two components that actually will help drive that in the market. One is coming up with the right commercial model. So these banks are learning through that process. But from a strategy, from a vision perspective, most of the banks in Saudi are looking at how they can actually have that enabled. So if you're talking to most of the critical banks, they'll have an answer for you on when it will be available. And it is actually very much driven and supported by SAMA. SAMA is actually pushing for that. They're trying to and facilitating that. So they're open discussion about what would be use case that would be regulated easily. For example, wallet as a service is a great example of how you actually can enable that. You don't need SAMA approval if it's a closed loop wallet, right? It's how you actually deliver that in the market that's important. So banks, the good news is by the end of this year, probably we'll see some of these banks already delivering these services. So we're very optimistic about how the financial institution in Saudi Arabia is actually is leading the region in that context.
Excellent, thank you. And then we've got some questions asking about a few technicalities around how banking as a service works, right? So one of the questions or repeat questions around customers in this. So do the customers, if I'm working with through an app, a third party app, and I am opening a bank account or I'm getting a loan, who is responsible for approving that? Is it the bank? Is it the third party app? And then who also takes the liability if something goes wrong?
Very, very important question. So these are, so basically, so normally if it's a fintech that has the business of creating a consumer lending, so they are the one who are making the decision. They're using the bank tools like the credit scoring tools or the loan management system to actually deliver that service instead of actually building that or acquiring that themselves. So they are responsible, they are liable to issue the loan, and they're liable for actually the payment of the loan. It's not the bank who's actually, it's not coming from the bank. The bank is just providing that as a service. Sometime if it can extend to how the agreement between the bank and the fintech comes in. For example, it can be very clearly highlighted in the context of cards, for example. So let's say there was a fraud payment on a card, right? Who would be liable? So there's a very clear regulatory framework on who should basically be responsible. So it's, even though there's a bank, small bank name, so that card is enabled or empowered by bank XYZ, okay, there are very clear guidelines of who is basically liable. So from a fraud protection, from a fraud, and then the beauty about this is the consumer is protected in that context. So he doesn't have to worry. He would call in, the support, for example, for that fintech, and already that component has been figured out between the fintech, the bank, the card issuer, and the regulator. So it's very clear who owns that. Most likely, it's going to be the card processor with the scheme that they need to handle that fraud. There's a very clear SLA of how they should handle this. It's business as usual.
And just to follow up from that, so regulation would also depend on what the agreement is between the bank and the third party, right? So in your example of a loan provider, the loan provider would have to be regulated because they're making the lending decision. But if the bank was making that and they were just a sort of a shop window for the bank's decision, then the regulation activity would sit with the bank in that. Is that correct?
100%. 100%. So you're right. So if it is a licensed lending company, then basically the decision is actually with the licensed lending company. If the fintech is basically using the bank license, and it's just a channel, it's a reseller of, but they are innovator in how actually delivering that in the market. It's the bank who's actually responsible for, and that's where the risk, and that's why the banks assess that risk component. So that's where the discussion happens. So you're 100% right. So that's why innovation happens, because in this case, banks are aware of the risk, but they would love to find the means to deliver that service to an innovative fintech who comes in with that mindset. Yeah.
And speaking about risks, so banking as a service is sort of removing the customer one step away from the bank, and there's good reasons for that, for all the reasons where we explained, and the efficiency and agility which it provides. What risks does that open the banking infrastructure to, or the financial services infrastructure to, and what sort of things need to be mitigated there?
So that's a very good question. So here, this is why I think it's from day one, as you build your architecture, as you move from a very silos system to actually more a microservices API architecture, you actually built what we call secure channels, right? So so you have end-to-end encryption, for example, end-to-end security. So this is part of the architecture evolution. That's why it's not just about the ability to that I want to do that. It's actually how you actually architect that, how you do it in the right context, and that's where banks have a lot of experience in doing that, right? So it's not something that this is the least of an issue from a regulator perspective, because that's already in place, right, from a day one. It's a complex, it's a difficult question, it's an important question, but the solutions are there. So it's not a complex way of how you actually implement that in the market.
Excellent, thank you. And if we just take the position of the fintech, right? So say I'm a fintech listening to this, I'm super excited about it. So someone with a fintech idea, I'm super excited about this as a banking as a service. What should I be thinking about as my business if I'm deciding that I want to go down the banking as a service route instead of developing all the solutions in-house myself?
Yeah, I think it's very important to understand what is your core business. What do you want to do, right? What will be your differentiator? What will be the use case you're going to address that market? Who's your customer base? And then how can I basically deliver that with where things are core to me, like customer ownership, like the customer experience, the delivery of the customer experience itself, while things that are I should not worry about and I can outsource, like for example, KYC, like issuing a card. These are areas that I don't need to worry about, or even sometimes remittance, right? I know remittance is a very, very interesting area in Saudi Arabia. Saudi Arabia is the second largest remittance provider revenue in the world, right after the US. And today it hasn't been disrupted, right? So it's a great way where banks are open to finding, if you are with the right, just like the example of Virgin Mobile, where you basically using your channel, the bank, Saudi Investment Bank used Virgin Mobile as a channel. So so focus on your core service, what you want to do as a differentiator, and then find the right banking partner that will be able to help you, banking partner and extended services that will be able to help you deliver the financial or the element that are basically not related to you, not core to you.
Excellent, thank you. So just final question for me, which we ask all our guests, is if somebody's listening to this, they're super excited about banking as a service, they want to learn more, where would you suggest that they look at? What sort of resources do you think they should be considering to sort of learn more about this area?
So I would highly recommend that they look at use cases. There's some. I'm more than happy to maybe send you some links to specific use cases that after the session, so you can put it out there. There's some very interesting podcast that talks about, very lengthy podcast that talks about learnings. Some of the things that did not work, right? How people have actually failed. So there's a lot of learning from failing attempts in different markets, so we can actually leverage from that. So I'll share these links with you.
Yeah, please do. I think they'll be super interesting for everyone. But thank you, Hassan. Thank you for this presentation. Thank you for answering all our questions and for your time. I think this has been super interesting. I'm sure a lot of people will be connecting with you on LinkedIn and wanting to learn more from you. And we're super excited about Fu's journey as well. So I'd love to see we love to see what you've been doing in the kingdom, and we're looking forward to doing more with you as well.
Thank you. It was a pleasure as well being with you guys.
Thank you very much, Hassam. So everyone else, I've got, as tradition at the end of this, we do have a big announcement. For the last few weeks, we've had some great announcements related to 24 Fintech. Just bear with me for a few minutes because you're definitely going to want to hear this one. Lena, do you want to share your slides? Just put it as a full screen. Okay, excellent. Thank you. So you're all familiar. Well, if you're not familiar, where have you been? 24 Fintech is the happening place happening in the first week of September in Riyadh. Sam's going to be there. I'm going to be there. Everyone we know is going to be there. So you've got to be registered for that and make sure you attend in Riyadh in person. We announced last week the essay competition. We have had a lot of good entries coming in. So thank you for everyone who's entered the competition. There is still time to enter that competition. So please make sure you use the QR code or the link in the chat and submit your essay on one of these areas as well. Don't use it for CVs. Don't send us your CV. This is very much for you sending us an essay that you have written. Don't use AI. Write it yourself, and we'll be reviewing all the essays. We've already started reviewing them, and we're looking forward to seeing more. That was last week's announcement. This week, we've got another big announcement for you as well. So we are launching at 24 Fintech Zero to Hero bootcamp, which in partnership with CFTE. CFTE, you might remember Hui from CFTE. He did a great fintech summer session with us on CBDCs. So his company will be running a training session. Now, this is a 5-hour bootcamp at 24 Fintech, where you will learn everything about being a fintech entrepreneur. It will take you from, you don't even have to have an idea. If you have, great. But even if you don't have an idea in fintech, this is a great place for you to start your entrepreneurship journey. It will provide you with the tools that you need to be a fintech entrepreneur, to how do you ideate, how do you build your business model, how do you look at customer validation, what are the successful strategies that you could use in the marketplace, and it will be in person. You will have hands-on experience from experienced trainers like Hui, like others from CFT, which will give you some amazing information. and you will also be able to network with some great people. So this is an opportunity. It's completely free to attend, but there is an application process. Now, do not join this if all you're looking for is a certificate, because there is a rigorous application process to get through to this, into this. I would highly recommend anybody who's interested in being a fintech entrepreneur, use the QR code over here or register. We'll put the link in the chat as well, so you can use that link. But do send in your application, start your application process over there. This is going to be a chance to work with some of the best people, best minds in the entrepreneurship industry, and working with some of your best peers. This is a very rigorously selected opportunity. So we are looking for 75, and there's only 75 places of the best aspiring entrepreneurs in the kingdom to take advantage of this. So do make sure you apply early, and the CFT will go through the process with you, and inshallah we'll be able to see you in person at the boot camp as well. So that's a big announcement this week, and we wanted to tell you guys before we tell anyone else. So this is the first time that anybody's hearing about this. You'll see it on social media, you see it on emails coming up in the next few days. But if you want to get in there early, then start your application now, and we'll get those applications going through. So again, thank you very much for listening. Kareem, Lena, is there anything else I've missed or anything we need to cover?
Thank you, sir.
I'll just have a look at the questions if there's anything related to the bootcamp. Essay should be in English, Omar. Thank you for asking that question. The bootcamp is physical, Amal, so you have to be at 24 Fintech. You've also got to register for 24 Fintech, so make sure you've registered first, and then you've applied for the bootcamp as well to get through. It's open to anyone, anyone in Saudi, so anyone who's going to be at 24 Fintech can apply to be part of the bootcamp session as well. And registration for the bootcamp, we'll just add it in the chat if it's not there. Is it there already? There you go. We've got it there in the chat. So you've got the registration link for both the essay competition and the bootcamp as well. So no excuses on not applying. You can still, Roa, you can still submit an essay even if you can't make it on person. One of the perks of the essay is you will get your award at 24 Fintech. If you can't make it, not an issue. We will send you your award, and we'll still publicize you if you win in the essay competition. And yes, non-Saudis, Saudis, anyone who's in Riyadh at 24 Fintech can apply for the bootcamp and participate in the bootcamp. So I think we've answered all the questions. Thank you all for staying a few minutes over time. But thank you very much for staying with us. And we are super excited to see you next week as well. We'll have week 8 of the Fintech Summer Sessions. So looking forward to seeing you all there. Enjoy the rest of your evening. And thank you again, Hassan, for staying with us.